Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, annuities, disability, business continuation, or final expense life insurance funding, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing the pros and cons of term life insurance. The number one pro of term life insurance is affordability. Most people go with term life insurance because you can get an awful lot of coverage for very little money. Now, I know very little money is kind of a subjective term, right? But yeah, I mean, if you want millions of dollars of coverage or even hundreds of $1,000s worth of coverage, term life insurance is going to be the way to go. That's how you're going to get the most amount of insurance for the least amount of money. It's going to be less expensive than whole life, less expensive than universal life, less expensive than index universal life. So it works really terrifically for people who are on a limited budget or who just want to get the most of amount of insurance for the least amount of money. The number two pro of term life insurance is flexibility. Now you can get policies that actually renew annually. So every year you could get the policy renewed. The price will go up every year because you're now a year older, or you can get policies that are going to lock in your youngest age for the next 10 years or 20 years or 30 years. Now, a 10-year policy is going to be less expensive than a 20, and a 20 is going to be less expensive than a 30. So the longer the policy is, the more it will cost because there's just a greater risk that you'll die during that time. The insurance companies know more about statistically when you're going to die than anybody else on this earth. But what this does is it just allows you to tailor the coverage to a specific period when you're going to have the greatest financial obligations or dependents. So say you got 10-year-old kids, a 15-year policy might work terrifically that if you were to pass away, that the surviving spouse could pay off the house and make sure that the kids' education is all paid for. So if you've got children that are 10 years old, 10-year-old twins, you could get some insurance, say a 15-year policy that would last all the way until the children are 25 years old. And that money could be used to pay off the mortgage so that God forbid you died, those kids would have a house to live in and a roof over their head the entire time. It could also provide enough money to pay for their college education. There's all sorts of different ways to look at it. Maybe you've got a 30-year mortgage on your home and you've got a $300,000 mortgage. Well, you could get a $300,000 term life insurance policy that's going to last 30 years. And that would just totally take care of your mortgage payment. God forbid you died too soon and your surviving spouse, partner, or loved one wouldn't have to worry about losing the house. The interesting thing on that, by just a side note, is that you know if the house you get it paid down to $150,000, you've still got a $300,000 policy on the house. So there's an extra $150,000 that can be used for other things, replacement income, or just kind of pay for any medical expenses or burial expenses or anything like that. So you got a lot of flexibility with the term life insurance policy. The third pro of term life insurance is it's simple and straightforward. What it is if you get a 15-year policy or a 20-year or 30-year policy, it's going to pay out X amount if you die during that time. You just can't get more simple than that. There is no complicated investment component or cash value accumulation or anything like that. All you're doing is just transferring a large amount of risk to an insurance company for a small amount of money. The fourth pro of term life insurance is protection for dependents. We've kind of talked about this a little bit, but you know, if you just want to make sure that your kids don't have to live in poverty, that they don't lose the house that they live in, that your partner or spouse or loved one can live the same lifestyle that they've become accustomed to with your income there, insurance works terrifically to make sure that, even though everybody will be mourning your death and just wondering how you could have died so soon, they will also be celebrating the fact that you loved and cared for them enough to protect each and every one of them, financially anyway, to make sure that they don't lose even more. And then the fifth pro of term life insurance is convertibility options. Some term life insurance policies give you the ability at some point in the future to convert a certain amount of that to permanent life insurance without any need for a medical exam. So let's say you got a 20-year policy at age 50, and 5 years into that policy, you had a heart attack and they put 3 stents in, and now you're on all sorts of medications and stuff like that. You're not going to get any more insurance for quite a while, at least a couple years, and that would be final expense simplified issue whole life underwriting insurance. So what you could do, knowing that you had a term policy at that point, if you had the convertibility option on your policy, you could convert a certain percentage of that over to whole life insurance, and that would be based off your current age when you took the policy out, and there's no health questions at all. It would be issued based off your health when you signed up to the policy. And boy, I tell you what, that can be a real saver sometimes, because when that existing term policy ends, you're going to lose all the coverage. So it allows you to convert some of that over to whole life insurance. Now, there are some cons of term life insurance. Number one is it is temporary coverage. So permanent life insurance, whole life insurance, is permanent. It's very simple. It's permanent. Term life insurance is going to provide coverage for a specific period of time. And if you outlive that policy term, the coverage is going to end. Now, you need to be really careful with this one. There's a lot of insurance companies that will say, hey, your term life insurance policy can go all the way up to age 95. And they just forget to tell you something that, yeah, if you had a 20-year insurance policy and you live 20 years and you want to convert that, it's going to convert over, and the rates are going to be adjusted on the fact that you are now 20 years older. And in many cases, the premium is going to quintuple or just quadruple. It gets crazy. It's almost like the insurance companies they kind of punish you. They don't want you to keep using the policy. It's just going to get so expensive. So technically, it's true that they can go up, some policies can go up to age 95, but the pricing is going to be punishing. And it would be the rare person that could absorb that much of a financial impact. Say you were paying $500 a year, and now it's going to be $7,000 a year. And it's going to go up every year thereafter. Yeah, crazy. So just understand, it's best used for temporary coverage. The second con of term life insurance is no cash value accumulation. Now, cash value is kind of like thrown around, like invest in yourself, kind of be your own bank and stuff like that. That doesn't really enter into play for the average citizen, the average insurance shopper, because they don't have the amount of money to fund it adequately. It's pretty much a high net worth, in my opinion anyway, a high net worth move where if you've maxed out every other kind of tax program and tax write-off and everything else, and you just want to kind of get one more last thing, then the cash value accumulation and banking on yourself and be your own bank, that can make a lot of sense. But from the average person who's living paycheck to paycheck, don't really pay too much attention to that. The third con of term life insurance is premium increases. So while the premiums are fixed for a specific period of time, they do go up when the policy ends. I already talked about that one. And there's something called an annually renewable term. And what that means is that every year your price is going to go up. You can get some pretty decent short-term low rates depending on your health with an annually renewable term. But Yeah, just understand the price is going to go up every single year. Kind of really a niche type product for people, for that type of product for people to use. The fourth con of term life insurance is no equity or ownership. It's not a whole life insurance plan. You don't own it. The insurance company always owns it, and they're always hoping that you don't die within that term. And they know for every 100,000 people, they know how many people are going to die and how much they're going to pay out. And they just price it accordingly so that they can make a profit and offer that insurance to you. But it's like car insurance. You never get money back for the car insurance. You could have drove 50 years and never got involved in an accident, never make a claim, and you're never going to get that money back because you got no equity or ownership in the insurance. All you're doing is paying a premium to transfer the risk over to an insurance company. So, just understand that's what it is. Unless you get into like a whole life insurance or universal life or indexed universal life, something like that, then you start getting into some equity and ownership type issues. And then the fifth con of term life insurance is limited customization. So there are some riders and some other living benefits that can be included in with term life insurance policies, but you got to read the fine print, right? So a lot of times an insurance company will say, "Hey, yeah, you've got living benefits with your policy," but the policies are prorated, like how long the policy's been in force and stuff like that. So just be aware that term life insurance, for the most part, if you can just think of it as, hey, I'm going to pay this amount a month or a year. And if I die within a specific time period, 15, 20, 30 years, it's going to pay this amount. And that money's going to go to my family. And that's going to protect them, God forbid, when the worst happens. That's probably the best way to look at it. And if there are any extra benefits, then yeah, that's just gravy. There are some companies out there that you can get riders or even some of them included in the plan where, like, if you're diagnosed with cancer, you could get a certain amount of money out of the policy. So say you had $1 million policy, you could get $50,000 out of the policy. Well, that's pretty cool if that happens, right? Because what happens when you have cancer or heart attack or something? You get medical bills, right? So, if there's some extra money out of the policy, that means you don't have to come out of pocket to pay a bunch of medical bills. That's a pretty cool deal. But it just depends on the plan. It depends your age, your health, a whole number of different things. But that is the pros and cons of term life insurance. My name is Randy Vandervate, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.